Today's topic, it's settling the tax liability for less, the offer and compromise. The offer and compromise is a last resort resolution strategy that most people use. It allows the taxpayers to settle the tax debt for less, but there are some criteria. Let's start with eligibility criteria. The eligibility criteria is financial inability to pay the full tax liability. That means that even if you can pay the months in the statute, you cannot fully repay the tax liability. Evaluation of income and assets. You have to have less income and assets based on your ability to pay. And also, offer and compromise requires compliance. You have to be compliant in filings and payments before you can file an offer and compromise. There are three types of offers that IRS works with taxpayers. One is doubt as to collectability. This one is where you're financially strained, and after you run the tests, income and expenses plus assets, you cannot repay the liability. That triggers the first requirement for an offer. The second type of offer is doubt as to liability. That means that somebody made an error, or either the IRS made an error, and then you doubt the liability and you say, this is not my liability, or it's a lesser number than it is. And then that's the second premise. And the third premise is called ETA, Effective Tax Administration, and this is based on a reasonable cause. In this type of offer, you could have the ability to pay, but doing so, it'll cause you hardship. So once you establish one of those criteria and you are compliant, then you would start the application process. But I would like to caution you here that in this particular topic, offer and compromise, I would never recommend you do it alone, regardless how simple the circumstances are, because it requires a lot of expertise and knowledge to get an offer through. Most of the offers are denied by the IRS. In my practice, I've had about 95% success rate with the offers, and the 5% failure has been due to lack of disclosure from the taxpayer or changes during the time of the offer. To file an offer, you have to fill out the Form 656 along with 433A or B, depends whether it's personal or business, and those forms need to be completed correctly and mailed to the IRS. The way the offer is calculated is they start with income from all sources minus the allowable expenses, and for a lot of them there is standards that IRS would allow, because if you have more than that, you can only get the standard. In some of them, if you have less than that, then you will only get whatever your expenses are, and then that called the CRP, collectional potential, and then that is multiplied by either 12 months or 24 months, depends on the tax liability and the income and the ability that the taxpayer can pay, and that's how the offer is derived at. Benefits of an offer. The offer is a chance that you could settle the tax liabilities for pennies on a dollar, when they say, because IRS can only take whatever you can pay based on your financial statement after verifying your financial statements. Challenges for an offer. There is compliance requirements, and then also IRS scrutinize your financial situation, and potential rejection believes that if IRS can collect more. Also, the compliance issue, once an offer gets approved, you would have to be compliant for 5 years in terms of filing taxes. You have to pay all your tax liabilities all at once. No installment agreements are available. And you cannot owe any other balances during the time of the offer, because that will render you non-compliant and you start back to square one. Conclusion. The IRS offer and compromise process is the last resort that the taxpayers have to make the liability go away and have a fresh start in their life. As I said earlier, in the offer and compromise, You have to seek professional assistance like myself or others that in the field they have done this. It requires precision. I did mention that the financial statements are not easy to fill out for many reasons. One reason is if you have business income that has fluctuated from year to year, that has to be averaged out. Some types of income are allowed to be averaged, some of them are not, and the professional will know how to articulate that to the IRS and make the argument forward. Offer and compromise is a legal process where you have to follow the process rigorously. IRS will not settle a debt if you have the ability to pay. So people think that offer and compromise is something that you offer the IRS and they accept it. That doesn't work that way. Everything is quantified just like anything in the tax returns. Thank you for watching. If you found this video helpful, do not forget to give it thumbs up and subscribe to the channel for more tips resolving tax issues and staying financially stress-free. Have a question or need personalized help? Drop a comment below and call us at 208-608-5653 and schedule a consultation. Remember, you don't have to face the IRS alone. We're here to help in every step of the way. See you in the next video.